In a country where thousands of families rely on a single income and the cost of living keeps rising year after year, one unexpected moment can change everything. Imagine a quiet morning in a typical UK household: kids getting ready for school, a partner preparing for work, bills sitting neatly on the counter, and a mortgage payment due at the end of the month. Now imagine that suddenly, the main earner is no longer there. It's a moment nobody wants to think about, yet it's a reality that hits countless families every year. And here is the part that shocks most people. Despite having one of the most advanced financial systems in the world, a significant percentage of people in the UK still have no life insurance at all. Many assume it is too expensive, others think their employer cover is enough, and many simply don't understand how these policies work. But the truth is that a single decision made today can change the financial future of a family for decades. That's why, in this video, we're going to break down everything you need to know about life insurance in the United Kingdom clearly, simply, and without the confusing financial jargon that often pushes people away from this important conversation. When it comes to financial planning in the UK, life insurance is often overlooked, even though it plays one of the most crucial roles in providing long-term security. Most people worry about paying their rent or mortgage, saving for their children's education, or building an emergency fund. But they forget to plan for the one thing no one can predict: the unexpected. Whether you're a young parent trying to protect your family, a homeowner with a 25-year mortgage, or someone approaching retirement and thinking about leaving something behind, understanding life insurance isn't just helpful, it's essential. This video aims to simplify the entire topic so you can make confident and informed decisions. We'll walk you through how life insurance works in the UK, why so many financial advisors consider it the foundation of a solid financial plan, and what mistakes thousands of buyers make when choosing a policy. You'll learn about the different types of cover available, from term life to whole of life, over 50s plans, family income benefit, and more, and how each option serves a different financial need. We'll also explore why premiums vary so widely, what factors insurers look at during underwriting, how payouts work, how taxes apply, and why placing your policy in a trust can save your family time and potentially thousands of pounds in inheritance tax. By the end of this introduction, you'll understand why life insurance is not just another financial product. It's a promise. A promise that even if life takes an unexpected turn, your family won't face financial hardship on top of emotional loss. A promise that your mortgage can still be paid, your children as future can stay protected, and the people you love most can continue living with dignity and stability. So, as we dive into the main sections of this video, stay focused, stay curious, and most importantly, think about what security truly means for you and your family in today's United Kingdom. Life insurance in the United Kingdom plays a far more central role in long-term financial security than many people realize. Yet, it remains one of the least understood areas of personal finance. At its core, life insurance is a simple contract. You pay regular monthly premiums, and in return, the insurer promises to pay a lump sum to your loved ones if you pass away during the term of the policy. But behind this simple concept is a powerful financial tool that helps families maintain stability during the most difficult moments. Across the UK, millions of people rely on life insurance as a protective shield against mortgage debt, childcare costs, household expenses, and long-term financial commitments that would otherwise overwhelm a surviving spouse or partner. With the rising cost of living, increasing interest rates, and growing household debt, the importance of life insurance becomes even clearer. Although the National Health Service provides essential medical care, it does not offer financial protection for income loss, outstanding mortgage payments, or long-term support for dependents. That's where life insurance comes in as a crucial layer of protection. Despite its importance, a large number of UK adults either delay buying it or assume they don't need it until later in life. The reality is that life insurance is often cheapest when purchased at a younger age and becomes more valuable as financial responsibilities grow. Many families with young children or large mortgages are especially vulnerable if they do not have proper cover. This section helps establish the foundation for understanding how life insurance works in the UK, why it matters to everyday households, and how it fits into a broader financial safety plan designed to ensure stability even in the most unpredictable circumstances. The United Kingdom offers a diverse range of life insurance options, each designed to meet a different financial need, lifestyle, or stage of life. The most common type is term life insurance, which provides coverage for a fixed period, often 10, 20, or 25 years. Within term life, there are three main variations. Level term insurance pays out a fixed lump sum throughout the policy duration, making it ideal for general financial protection or income replacement. Decreasing term insurance gradually reduces the payout over time and is commonly used to cover a repayment mortgage, where the outstanding balance decreases each year. Increasing term insurance does the opposite. It raises the payout over time to keep pace with inflation. Another major category is whole-of-life insurance, which offers lifelong protection and guarantees a payout no matter when the policyholder dies. This makes it a popular choice for estate planning, paying funeral expenses, or leaving a guaranteed inheritance. Then there is family income benefit, a unique and often overlooked option in which the payout is not a lump sum but a steady, monthly income for the remaining years of the policy term. Many families prefer this because it mirrors a salary, making budgeting easier. For those aged 50 and above, over 50s life insurance provides guaranteed acceptance without medical checks, making it accessible for people with health issues. While premiums may be higher, it offers peace of mind for covering final expenses. Understanding these different types is crucial because choosing the wrong one can lead to inadequate coverage or unnecessary costs. By learning how each policy works and what purpose it serves, individuals and families in the UK can make smarter decisions that align perfectly with their financial responsibilities and long-term goals. The cost of life insurance in the UK varies widely, and understanding how premiums are calculated can help you secure the best value for your budget. Several factors influence the price you pay, starting with age. Younger applicants typically pay significantly lower premiums because insurers view them as lower risk. Health is another major factor. Conditions such as high blood pressure, diabetes, obesity, or a history of serious illness can increase your premiums, as can lifestyle habits like smoking or excessive alcohol consumption. Occupation also plays a role. High-risk jobs, such as construction, offshore work, or emergency services, may be subject to higher premiums compared to office-based roles. The amount of cover you choose, often called the sum assured, directly impacts the cost. The higher the payout, the higher the premium. The length of the policy also matters. Longer terms generally mean higher monthly payments because the insurer is covering you for a longer period. In the UK, insurers use a process called underwriting, where they assess your personal details, medical history, and lifestyle to determine your risk level. Some providers offer quick quote policies with minimal checks, but these often come with higher premiums or exclusions. Fortunately, there are ways to reduce your costs. Quitting smoking for at least 12 months can significantly lower premiums. Maintaining a healthier lifestyle, comparing quotes across multiple providers, or choosing a decreasing term policy can also keep payments affordable. It's also important to avoid underinsuring just to reduce costs because the goal is to protect your family adequately. Understanding what influences premiums empowers you to shop smarter, negotiate better, and ensure you're getting a policy that balances affordability with strong financial protection. One of the most reassuring aspects of the UK life insurance industry is the extremely high claim acceptance rate, with the majority of reputable providers paying out around 95 to 98% of claims. This reliability gives families confidence that their financial needs will be met when they need it most. The claims process is designed to be straightforward, especially during a time of emotional stress. When a policyholder passes away, the beneficiary or family member contacts the insurer, provides the policy details, and submits the necessary documentation, which typically includes a death certificate and sometimes medical records for verification. Once these documents are reviewed and the claim is validated, the insurer processes the payout, usually within a few weeks. In cases where the policy is written in trust, the payout can be even faster because the money bypasses probate. Delays generally occur only when important information is missing or when the insurer needs additional clarification, such as undisclosed medical conditions or inconsistencies in the application. Transparency during the application stage is crucial to avoid complications later. Beneficiaries should also be aware that some policies include additional features like terminal illness benefits, which allow the policyholder to receive the payout while still alive if diagnosed with a life-limiting condition. Understanding the claims process helps families feel more prepared and ensures that they know what steps to take when the time comes. Knowing how and when payouts are made is a critical part of planning, because it directly affects how quickly loved ones can access funds to cover funeral costs, mortgage payments, debts, or general living expenses during a challenging period. One of the most unique aspects of life insurance in the UK is how it interacts with tax rules, especially inheritance tax. The good news is that life insurance payouts themselves are not subject to income tax, meaning beneficiaries receive the lump sum in full. However, the payout can become part of the deceased estate, and if the total estate value exceeds the UK inheritance tax threshold, the amount above the threshold may be taxed at 40%. This is where many families unknowingly lose a significant portion of their financial protection. To avoid this, many policyholders choose to place their life insurance policy in trust. A trust is a legal arrangement that separates the payout from the estate, ensuring that it goes directly to the chosen beneficiaries without being taxed and without waiting for probate, which can take months. Setting up a trust is usually free and straightforward, and most insurers provide the necessary forms. Beyond inheritance tax, life insurance plays a key role in broader estate planning. It can help pay off debts, cover funeral expenses, replace lost income, and ensure that children receive financial stability. Some people use whole-of-life insurance specifically for legacy planning because its guaranteed payout helps cover potential inheritance tax bills. Understanding these tax implications helps families make smarter financial decisions, ensuring that more of their money stays with their loved ones where it belongs. For many households, placing a policy in trust is one of the most powerful steps they can take to protect their family from unnecessary tax burdens and long delays during an already difficult time. The UK life insurance market is home to several long-established and financially strong providers, each offering different strengths in terms of pricing, coverage, and customer service. Companies like Legal & General, Aviva, Royal London, AIG, LV=, Scottish Widows, and Vitality are among the most recognized names. Legal & General is often praised for its competitive premiums and straightforward policy options, making it a popular choice for families seeking affordable coverage. Aviva stands out for its flexible policy features and strong claim support, offering a wide range of add-ons such as critical illness cover and family income benefit. Royal London, known for its customer-first approach, often provides enhanced underwriting options and personalized support for people with complex health histories. LV= is well regarded for its excellent critical illness policies and comprehensive protection packages. While AIG offers global coverage and innovative benefits, Vitality is unique in the way it encourages healthy living through rewards and premium discounts, making it ideal for people who want lifestyle incentives alongside financial protection. When evaluating providers, it's important to look beyond just the monthly premium. Claim payout rates, customer reviews, policy flexibility, optional add-ons, and financial strength all play crucial roles in determining the long-term value of a policy. Different providers may also specialize in specific types of coverage, such as over 50s plans, whole-of-life insurance, or mortgage protection. Comparing multiple insurers through UK comparison platforms can help buyers find the most suitable plan. Understanding the strengths of each major provider empowers you to choose a life insurance company that aligns with your budget, lifestyle, and long-term financial goals. Choosing a life insurance policy in the UK can feel overwhelming, which is why many people make avoidable mistakes that lead to higher premiums or inadequate coverage. One of the most common mistakes is underestimating how much coverage they need. Many buyers choose a small payout to reduce the monthly cost, only to later realize that it wouldn't fully protect their family's financial needs. Another mistake is delaying the purchase. Waiting until later in life significantly increases premiums, and health issues that develop over time can make coverage more expensive or even lead to declined applications. Failing to disclose medical or lifestyle information is another major issue that can lead to denied claims. Some people also choose the wrong type of policy, such as picking level term when decreasing term would better match their mortgage, or selecting over 50s insurance when standard term cover would have been cheaper and more suitable. A critical mistake is not placing the policy in trust, which exposes the payout to inheritance tax and probate delays. To avoid these pitfalls, a simple step-by-step approach works best. Start by calculating your financial needs, mortgage balance, children's expenses, household bills, and long-term goals. Decide whether you need term life, whole of life, or family income benefit. Compare quotes from multiple providers and check customer reviews, claim rates, and policy flexibility. Consider adding critical illness cover or income protection if your budget allows. Once you choose a provider, set up the policy in trust to protect your beneficiaries. Finally, review your policy every year or after major life changes such as marriage, buying a home, or having children. Making informed choices ensures that your life insurance becomes a reliable safety net, providing peace of mind and financial stability for the people who matter most. In the end, life insurance in the United Kingdom is not just a financial product, it is one of the most meaningful commitments you can make to the people you love. Throughout this video, we've explored how life insurance works, the different types available, the cost factors, the claims process, tax considerations, and the common mistakes that many families unknowingly make. All of this leads to one simple conclusion. Planning ahead is not about expecting the worst, but about ensuring stability no matter what life brings. When you choose the right policy, you're not only protecting your home, your children, or your financial legacy, you are giving your family time, dignity, and the ability to focus on healing rather than worrying about bills or debts. That's the true power of life insurance. So, as you walk away from this video, take a moment to think about your own responsibilities, your long-term goals, and the people who rely on you every single day. Whether you're just starting a family, paying off a mortgage, or planning your future retirement, the right life insurance plan can transform uncertainty into security. If this video helped you understand the importance of protection, make sure to like, subscribe, and share it with someone who might benefit from this information. And if you have questions or need guidance on any part of life insurance in the UK or personal finance in general, drop them in the comments below. We're here to help you make smarter, safer, and more confident financial decisions.